Sure. Still waiting for. Let's give people some time, 5 to 10 minutes. People to keep joining in the class session right now. Okay. We're still getting time to join. Let's just wait for the next 10 minutes for the participants to keep joining. Okay, so far so good. Let's give it time for the people who are just taking time to join before I actually start going live. Sound check. Everybody good? (9:05). I'll begin the session. I don't want to keep anybody waiting, so I hope everybody is taking time to join. Perfect. Let's keep it coming. Let's keep it coming, guys. Let's keep it coming. Hope everybody's doing good. It's been a great trading week. Because what I'm about to talk to you today is mind-blowing. Just give it time. You guys can keep chatting on the live stream. Some questions before I start diving into my topic today. 9:05, I'll be going live. I'll be starting the session. I'm not going live, I'm already live right now. Okay. It's 9:05. I hope everybody's ready. So I want to take more of the time. I'll get straight to business. So for those who doesn't know me, I go by the name Banks. That is just my stage name, business name. I'm called Banks because I trade like a bank. So that's where the name came from. And today's session will primarily focus on the truth about the Forex market. I think everybody deserves to learn this, to understand the very key information about the Forex market. Okay, so for those who doesn't know what the Forex market is, for the complete beginners, for the people who are already experienced in Forex trading, they know what the Forex market is. But for those who are just newcomers in the session or newcomers in the industry, the Forex market is one of the largest financial markets, dealing with trading of different instruments, and it has the largest liquidity of $6.6 trillion traded per a single day. That is based on the 2019 report. So I think in 2022 we are at 7 trillion liquidity per single day. So that is mind blowing. That is a very huge number traded in the Forex market. Okay, so the Forex market is it has a lot of participants. Back in time, there were very few, but now due to technological advancement, we had the opportunity to have a lot of participants. That includes central banks, hedge funds, insurance funds, and us, the retail traders, the small fishes, right? Thank you. Somebody's saying the mentality in the market is epic. That is amazing. Thank you very much. So I want to dig deeper into the truth about the Forex market. Okay. For years now, people have believed that the Forex market is random. That price in the Forex market just moves in a random. The price in the market just moves in a random form. But what I'm trying to break it down to you today is that Forex market is not random. The Forex market is pre-manifested by the big players. When I say the big players, these are the participants in the Forex market who trades huge liquidities. Okay, we're talking about Citibank, we're talking about JP Morgan, we're talking about different central banks, the Bank of America. These are the big boys, and we are simply in a very huge battle with them, us, the retail traders and the big banks. It is a war. Okay, so people tend to lose money consistently in the market because they don't understand the key components that drives the market. Okay, they believe the market is random. The market moves in the way it wants. Okay, and people just take the Forex business as a game of probabilities. If you treat Forex trading as a game of probabilities, you'll simply connect the business similar to perhaps gambling or sports betting. You know what I'm saying? So the Forex business is not a game of probabilities. Funny, right? I know. I think you guys have been told this big lie that the Forex market is a game of probabilities, that we trade probabilities in the market. Yeah, somehow it's just a perception. Okay, but what I'm trying to bring to you today is that the Forex market is not a game of probabilities. If it is not a game of probabilities, then the Forex market or Forex trading is simply a game of certainties. Okay, you're supposed to collect facts, you're supposed to collect information. The information is out there, it's free. The information is free out there. So it's your duty or it's your obligation to try to analyze this information to make a very educated decision before you take a trade. Okay, so as I was saying, a lot of people are losing money consistently in the market because they don't understand that the Forex market is not random. Forex price, the price in the Forex market is pre-manifested by the big players. How is it pre-manifested? So let me ask you a question. If you are going to war, would you buy weapons or guns and ammo from the enemy? The answer is automatically no. You cannot buy ammo or guns from the enemy. This is simply because you'll be prone to losing before you even go into the war, because you've simply given the enemy the upper hand. So Even in the Forex wars, these big players sit on the other side of the mirror, trying to, they see what we do. They actually see what we do. These big players, they see what we do. These are the terminals that we use, the tools provided by these institutions. They're simply given to us by the big players. So they want us to trade, or they want us to approach the market in a very similar manner, so that it can make it easier for them to actually punish us. Here's the deal. I'm going to break it down to you. The Forex market is only the only two type of players: the buyers and the sellers, and there is the market. Okay, so simply there are people who analyze the market. Let's say, for instance, we are at the instrument of gold. Let's say gold. There are two types of participants: the one who buys gold and the ones who will be actually selling gold, basing on the analysis or basing on what data they have collected. So if the buyers take their trades and the sellers take their trades, and the market has to only choose one way, and that is to either buy or sell. Now, if the market buys, it means the money lost by the sellers goes to the people who bought that instrument. I'm talking about gold now. So the money lost by the sellers goes to the people who bought gold. Now, if we are in the Forex wars, which means us, the small, the retail participants, we cannot see where the big players have kept their positions. But the big players, they can sit on the other side of the mirror and actually see what we do, what we small retail traders do. So it is easy for them to manipulate the market, trying to trick us into going the other way, and they will move in the pre-manifested direction. Okay? So the trading tools offered to us by these big players are the same tools that we use into trading, and that is why a lot of people are losing money in a very large volume, because we are using the same tools given to us by these big players, and we cannot escape this. We cannot escape this, because that is what is available in the markets right now, as opposed to the terminals and platforms that they're provided by them. But there is a way. If you cannot beat your enemy in this war, the only option we have is to join them. Okay, supposed to join them. Now, I'm not going to school you about how to join the big players right now. I'm just going to dive in to telling you why the Forex market is not random. Okay, since I think 2015, when I was trading the flash crash and the Swiss crash, there is a body, there's an authority body, the CFTC. Now, the CFTC, it's a commission. Okay, it's a commission. It's an authority that regulates traders, the big players. So the CFTC controls the over speculations of the players in the Forex market. What do I mean? So simply, right now it is illegal for the big players or the participants in the Forex market to over speculate an instrument. So they are controlled. The CFTC controls these over speculations in the market. Now, making price not random. If they are monitored and they are controlled, it means that there is a certain extent that price has to turn. There's a certain extent that price has to reverse to make a retracement. There's a certain level where price needs to make a reverse or needs to extend. because they are already they are monitored, and they are limited to over speculate in the forex market, just to avoid another market crash in the forex market. Okay, so that is one of the reasons why the forex market is not random, and we need to understand few things. You need to understand a few things that why the forex market is not random. Okay, these big players, the big participants in the forex market, they do not execute their trades where the money is. They don't execute their trades just because there is a certain amount of stop losses clustered in a certain area. No. The big players, or the market makers, or the dealers, they execute their trades based on their business plans. And I won't talk about the business plan. That is something that you have to make a research on. But I will take time, I will take hours to literally just make you understand why the big players execute their trades based on their business plan, not where the hot back is, not where the money is, not where you have clustered your stop losses. No, they simply trade where, based on the business plan. Okay, and let me see. Sorry, guys. Okay, and if they are trading based on their business plan, what does that make it? It makes the forex market less random. It makes the forex market simply pre-manifested and move, or move in a manner that is organized, not random. We have the quarters. Before price makes any movement in a certain period of time, there is something that we call quarters. Okay, any instrument in the forex market moves in a quarterly manner. So quarters are pre-manifested, that they are there before even the price moves. So when the quarter starts, it has to be respected. It has to be respected. Like, for instance, we are trading the cable. When I say the cable, I mean the GBP USD. Now, the GBP USD, before it starts, for instance, let's say it's a new year. Okay, it's a new year. So before GBP USD starts trading, there is a specific quota that is pre-manifested by the big players, that we are going to drive the cable through this direction for this period of time. Okay, so they're going to move the cable, let's say, downtrend for almost 6 months, or for 8 months, or for 10 months. So it is already pre-manifested. Now, if you understand the quarters, you definitely see, okay, the forex market is not random. It is pre-manifested. If you understand where the direction of the market is going, it will be very easy for you to take trades in a very respectable manner without sharing. Something is popping up on the screen right now. It's no big deal. What was I saying? Yes, the quarters. Now, if you understand the quarters of every pair in the forex market, that it has to move in a certain direction in the respective number of quarters in a certain period of time as well, you will definitely approach the market differently. Okay, if you know that the cable or the GBP USD is going to sell for almost 10 months. Now, what will you be looking in the markets? Will you be looking to buy opportunities, or will you be looking for selling opportunities? Because if you treat the forex market as a random market, you'll simply take every fake opportunity presented to you by the market. Because the big players will try to fake, will give you fake patterns, will give you fake structure breaks, will give you fake pivot points. Now, let me tell you this. How many times have you tried trade using the EMAs? Okay, as soon as you were told that as soon as these EMAs, certain period EMAs crossover, you wait for a retest, put in order, let it dry. Now you get that crossover, but the market does not go the way it was intended to go. The market just reverses right there and the stop loss gets hit. Because all these instruments and tools provided in these platforms and terminals, they are simply given to us by the big players. So it is easy for them to manipulate us because they already know the tools that we are using. Okay, now how many times have you taken a trade in a pivot point and simply it is not respected? How many times a trend line gets broken and you simply treat you want to treat it as okay, a break and retest, and it doesn't really retest. It breaks, but it simply retests. You take a reversal order against the trend, and the price just moves away from your predestined direction, and it just gets get nailed out of the market. You get the point? Now, all this is simply the hidden agenda created by the big players. Now, there is a way to understand this market, and there is only 6 characteristics of the Forex market that you need to understand that will simply change your trading mindset. That will simply change your trading mindset. And these characteristics are very few characteristics you can understand that the market, the Forex market moves in cycles. Okay, the Forex market moves in cycles. Now, what are the cycles? Cycles, these are the daily basis movements. Okay, now these are the movements that are already planned by the dealers in a certain particular day. It moves in a cycle in a certain period, in a certain direction, in a certain manner. That is the market cycle. Now, if you understand how these big players move the price basing on the cycles, you will simply trade the Forex market or approach the Forex market basing on the theory of certainty and not a theory of probabilities. You will simply approach the market with certainty because you will know this is how the big players move the market. And these are the cycles, these are their movements, this is how they move every single day, every single month, every single week, every single year. This is how they move. Now, if you understand their cycle, it will be very easy for you to understand, very easy for them to execute a trade, okay? Somebody's saying hates using a stop loss. You know, using a stop loss can be a good idea, but most of us retail traders, they simply put a stop loss where everybody else is putting stop loss. That is the naked truth. Everybody puts a stop loss where everybody else is putting a stop loss because we are wired to think the same. We are given books, free books. That is why I'm always against people reading random Forex books, okay? Because you are simply trained to think the same way as everybody else. Now, if everybody else is trading the same way as each and everyone, it makes it easy for these big players to manipulate the market, hit the stop loss, bank their money, move away. You're left on the charts crying, hoping for another trade. You take a fake, you're given a fake out or another fake pattern in the market. You take a trade, messes up with your trade again. You keep losing because you keep treating the Forex market as a random market, but it is very organized. Okay, now I was talking about the cycles. That is one of the characteristics of the Forex market, that the Forex market moves in cycles. Okay. The other thing that you're supposed to understand is Forex market has a map. Okay, the Forex market has a map. And what do I mean when I say that the Forex market has a map? Like I was speaking earlier about quarters. Now, quarters is one of the maps that the Forex market uses, because the quarters simply gives the direction of a certain instrument in a certain period of time. Now, if you have the map, if you have the roadmap before executing a trade, it keeps you in that 1% of the people who are actually prone to winners. Okay? You'll be avoiding a lot of fake ups in the market because you have the map. You know what price is headed. Now you'll avoid every single fake out in the market and simply take trades basing on what the map is telling you to go. Okay, so the Forex market has a map. That is the second characteristics that makes the Forex market not random. It has a map. And another instrument or another way of proving to you that the Forex market has a map, there is something called the COT. Now, I won't speak about it in a very deep manner. The COT or the COT report, the Commitment of Traders report, it is a report published every Tuesday and every week, but it is published on every Friday, just 2 days after it has been published. And this is to just to keep a little delay so that traders cannot have the accurate data, just to delay a little bit. Okay? But the COT report simply shows the positions that the big players have taken. Now, if you can see what the big players has, if you can see the position of the big players where they have placed the trades, it makes it easier for you to understand what trades you're supposed to take. Now, if 70% of the big players are shorting gold, why should you be buying gold? Okay. Now, if you have that roadmap that you understand that a larger number or a larger percentage of participants in the market are shorting gold, why should you be going the opposite way? Or why should you be taking setups or signals that are counter to what the COT report says? Okay, so the COT report acts as a map. In the Forex market. So that is the second characteristic of Forex market. It has a map. The Forex market has patterns. I'm not talking about the head and shoulders. I'm not talking about the bull flags. I'm not talking about the bear flags. We've all learned about those. We've all learned about these patterns, the cheesy patterns. But the pattern that I'm talking about is a repetitive behavior that price makes in the market consistently every day, every week, every month, and 10 years back, 20 years back. This is the one thing you should understand. The Forex market is repetitive in nature. There is nothing new in these markets. They say the market is dynamic. Yes, the market is dynamic, but it keeps repeating the same patterns over and over again. There is no new trick in the hat. The dealer or the big players, they have no new trick in their hat. So they simply keep repeating the same things that they have been doing 10 years back. If they have been using a trick 10 years back, so 10 years later, they use another trick. So when you forget about the other trick, they bring back the old trick into the new world. So they simply keep repeating things. Now, there is no new trick in their bucket. So if you understand the repetitive behavior, the repetitive patterns that they keep showing on these charts, you will simply approach the Forex market in a very respective manner. You won't treat price randomly. Okay, you won't treat price random. You simply treat price as an organized market. Okay. Fourth, you're supposed to understand the market peaks. What are the market peaks? You're supposed to understand the extent of where price is headed. Okay, I was talking about the CO2 reports. Okay, the CO2 reports, and the CFTC that regulates the over speculation of instruments in the market by the big players or by simply commercial players and non-commercial players in forex market. Now, when there is an over speculation of a certain instrument, there's always something that we call the peak. Now, a peak is it's a level where an instrument can go any further. If it's at the top, at the premium, or it's at the discount, there is an extent where an instrument cannot go. Now, if you understand the features of a peak, okay, what makes a peak, and what the peak look like, what characteristics does a peak has, you will simply know that, okay, this is simply a reversal. This instrument can go any further high and it cannot go any further low. Okay, so that is how you're supposed to understand the peak. There's a lot of information based on how you can understand the peak, understanding the pattern, understanding the market, the map, understanding the cycles. But the most important, the number 5 characteristic of the forex market that makes it not random is that the market levels. The forex market has levels. I'm not talking about the institutional levels. I'm speaking about those hidden levels in the forex market that they are in front of you, but you cannot see them until you understand how the market behaves. Interesting, right? Very interesting. And I can use the whole week speaking about the market levels. I can use the whole week speaking about the market levels because this is the most important characteristic of the forex market. The market has levels. There are certain levels where price hits, you get a reversal. Price get hit, you get a very sweet, accurate entry in the market. So if you understand the market levels, you will not treat the forex market as random, because you will know right there that specific point in the chart will simply will be your turning point. So you will take the trade accurately and with certainty, because you know that is where price will turn. I hope you're all getting the point. Okay, somebody has a question, but I'm going to reach back to your question later. I'm just finishing the last point. The 6 characteristics of the forex market is the point of interest, or the area of interest. Now, the forex market has areas of interest. What is the area of interest? There is, you have a chart, you're trading, okay, my favorite pair in the currency section is the cable, the GBP USD. Now, assuming trading a GBP USD, you have viewed a reversal pattern. Perhaps GBP USD has hit a certain level, has hit a certain peak. Now you understand that, okay, this is exactly where the pair is going to turn. But if you don't understand the area of interest, you will take a trade blindly, because areas of interest, these are the areas that are sitting right in front of your chart, but you cannot actually notice them because you have no idea what they look like, or what they are, or what significance they bring on the market. Now, if you don't know about them, you'll simply take a trade blindly. Now, these areas of interest or points of interest they act as magnet. They pull price to them. Okay, I could take time and show you the chart, but I really can't right now. I just want you to understand what I'm trying to say. Now, if GBP USD is trading at a certain level, and you think this is where it will reverse, but there is areas of interest in, just up there sitting. You take your trade, you put your stop loss, and you wonder why the cable had to do what it had to do. People blame the market, but the market is manipulative, or the market is being tricked, or you're being induced into taking trades so that you can be stop hunted. Now, there is this saying: stop hunts and stop trades. People think stop hunts cannot be avoided, but simply where your stop loss is where somebody's entry is. Just think about it. Where you put your stop loss is simply somebody's entry, because you do not understand the areas of interest. You take a trade, you put a stop loss because you do not understand the area of interest. If you understand that price would go at that particular area, you wouldn't put your stop loss at that level. You are losing trades, your stop loss gets hit every single time because you don't understand the area of interest. But if you understand the areas of interest, you understand the market cycles, you understand the market levels, you understand the market map, you will not be prone to losing. If you understand the pattern, what does the big boys trying to show you in the market, the footprints, the blueprint that the market gives you, but you're not using it. Okay, so if you keep treating the Forex market as a random market, you will keep losing trades. But if you focus on these 6 things that I have told you today, or I have revealed to you today, you will simply approach the market using the theory of certainty. People always wonder why I take accurate trades, why I always accurate to people, why are they sniper entries? Because I treat the markets with a theory of certainty, because I understand where I'm putting my entry is where the market will turn. I'm not taking a trade thinking, oh, I'm putting a buy here. If it hits my stop loss, I'll take another buy at a certain level here. You're simply guessing. You're just gambling your money. You're giving it, simply just giving it as charity to the brokers or to the market. You're just giving it away for free. Okay, so you're not supposed to treat the market that way. So those are the 6 key points that I prepared for you today. So the truth is, the Forex market is not random. Forex market is pre-manifested. It's pre-manifested. Why? Because there are levels, because there are peaks, because there are patterns, there are cycles. There is the map, and there's the areas of interest. Okay, and I teach all these things in my course. Okay, I'm going to be answering 2 questions right now. Somebody asked if price tends to repeat its patterns from the past, does it mean fundamental have no greater impact on price? Is trading technical only at a view? Okay, that's a very beautiful question. If price tends to repeat its patterns and its cycles and its levels, so there's fundamental, there's no greater impacts. Listen to me. Forex market, or the technical overview of these of the markets, as I say, it is pre-manifested. If these big players, they wanted, or they've already provided a blueprint that, let's say, the silver or the gold will be bullish this month, there is absolutely nothing that will change that. Now, the fundamentals only come to add up liquidity in the market, but they do not go against the technical overview. Fundamentals act let's say okay, let's assume you have a car. Your car runs at 180 kilometers per hour. That is the top speed. But what if you switch the engine, you put a supercharger, twin turbo, and some nitrous gas? Car will run faster. It won't run backward, it will run faster. So fundamental releases of fundamental events, they just act as an injection of liquidity in the market, but they do not go against the technical overview. And if you have analyzed the chart in the technical overview and the fundamental goes against the technical overview, that means you have analyzed wrongly, anyways, you have not analyzed the Forex market or your particular instrument in the right manner, because the fundamentals act as an injection of volatility. You can go back to the charts in any day, any fundamental event before it was released, and I will show you exactly before the release there was a technical overview that wanted that was predestined the price to go in a certain direction, but it's not against it. It will just add volatility to it. So simply fundamental events can act as volatility to finish the trend, or it can simply act as a reversal. Okay, but it does not change the technical overview. I think I've answered your question. Somebody is asking, so backtesting is the holy grail of trading, right? Backtesting is not the holy grail of trading. You can simply, it is easy to see, it is easy to spot why prices moved in that respective direction after it has, okay, on a historical data, it is easy to see why price moved in that direction, but it is very hard. It is very difficult if you don't understand the 6 components that I have just talked about. It is very hard to anticipate price to move in a certain direction because this marks my point that backtesting is not the holy grail of trading, but understanding these 6 components that I've shared with you will actually will make you certain in what you're trying to do. You can backtest for years or for months or for weeks, but when you come to trade the live market, you cannot simply execute a trade. You will just chicken out and you will not be certain with what you are doing. So backtesting is not the holy grail. You simply get the right information, execute with accuracy, and execute with certainty, not with probability. Okay, I think I've answered your question. If not, you can actually tell me. Okay, so somebody is asking, is also crypto market not random stocks? Well, I'm not a crypto guy, and I won't speak about crypto, because cryptocurrency, what makes it weird is its intrinsic value. The intrinsic value of the crypto market is crazy. Okay, you will wake up, you will invest $10,000 today, you wake up broke tomorrow, like it has no value at all. Why? Because I think the crypto market is driven by hype, or by few people who actually has influence on the media. So people just they invest in these upcoming cryptos without understanding the reason behind them. So I won't speak much about the cryptocurrency market, but the stocks market, as I told you, the big players, they execute their trades based on their business plans. So in the stock market, it all comes down to their business plan. Okay, so you can find there was a time that the stocks market were Jewish down because of Elon Musk or Jeff Bezos doing good in the industry, because these big players, these tech tech giants, they control the NASDAQ. Okay, they control the NASDAQ. So even the stocks will be, they will perform better because it's their business plan. So simply these big players, they control the price of their stocks based on the business plan. So it is not random, it is also pre-manifested. So if you understand what you're doing and you know how to analyze your data well, the stock market is not random. Just simply collect your facts, collect information, and learn how to analyze it better than anybody else. Oh, somebody's saying today is week 75. Yes, I took that trade. And indices, okay, I won't speak about indices, but they are also not random, because simply the synthetic indices, they act as a fear gauge of the stock market. So they are somehow inversely correlated. So if you understand the synthetic indices side, they are just simply fear gauges that is related to the stock market. Now, if the stock market is not random, then the synthetic indices are not random as well. What is your secret behind the sniper entries? Is it recommendable to put the stop loss when executing the trade, or you can wait for the price to make move when you place your stop loss? Well, for years now, I have 7 years of trading experience till this present, and I will tell you one thing. I want to tell you one thing. Okay, what is the secret behind sniper entries? I have given you 6 characteristics of the Forex market. You're supposed to understand the levels. You're supposed to understand the cycles. You're supposed to understand the map. You're supposed to understand the pattern. You're supposed to understand the areas of interest. You know what I'm saying? I hope you're getting what I'm saying. Now, if you understand these 6 components, that is when you will execute a sniper entry. The sniper entry is just a result of following your trading system. Now, if your trading system is accurate and it is based on the theory of certainty, you will get sniper entries. Now, if you are trading the Forex market using the theory of probabilities, it is very hard to get a sniper entry because you will not respect the 6 components that I have just told you. You will not have the accuracy and the consistency to execute trades because you don't understand it. You get my point? So the secret behind sniper entries is understanding the 6 components that I just talked about. Somebody saying, can I have a dollar account with Forex market? Yes, you can have a dollar account with Forex market. A dollar account, there is a ZAR account. And for Tanzanians, I think as time goes by, we will bring the T-shillings account. So you guys are supposed to get ready, because we are going to bring the best accounts for you Tanzanians. Somebody's asking, was there a time in your learning process you are feeling like giving up trading? That is very personal. Giving up has never been my option. Okay, there are times you feel down, but giving up is never an option. If you understand your why, if you know your why are you trading? Why have you embarked on the Forex journey? You'll never give up, because trading in the Forex industry or in the Forex market is the simplest way, or it is the hardest way to make easy money. It is easy money if you understand what you're actually doing. But trading the Forex market is a very humbling experience, Trust me, it's a very humbling experience, because you will learn a lot of things. You will learn a lot about yourself, risk management, how to manage your psychology, your mindset, how you approach the market, and so on and so forth. You have a course or offer mentorship. Yeah. there's a course and there's a mentorship program that I'm offering. Okay, so no more questions so far. If there is no question, I think I have we have spent almost an hour speaking about the truth about the Forex market, and we're running out of time. We have like 9 minutes. If there is no questions, please just tell me in the comment section. Are there any more questions so far? Anyone, anybody? Okay, guys, if there is no question, I think this marks the end of our session. Thank you guys for joining, and let's meet next Thursday for more mind-blowing facts from me.